Okay, so as we said earlier, today we'll be looking at Ipsas, effect of changes in foreign exchange rate. That's one of the key standards as well. Most of the times you may see it as part of the additional information when you are doing the full account. That's when you're preparing the financial statement. You may be seeing it as part of your additional information. So it's one of the key standards as well. So what's the objective of this standard? The objective of this standard is to prescribe the accounting treatment when it comes to foreign currency transaction and then foreign operations. There are some key definitions you need to know from the standard. One of the things we need to know is closing rate. Whenever we hear of closing rate, we are looking at the exchange rate, which is at the reporting date. So the exchange rate at the reporting date will be a spot rate. And for Ghana, our reporting date will end at 31st December of every year. Then what is exchange difference? Exchange difference is the difference resulting from translating a given number of units in one particular currency into another currency, but the exchange rate will be different. So in a case whereby you have an amount of money you want to translate into different amount of money, then that's exchange difference. So let me ask, what's the current exchange rate to the dollar? Ghana city to dollar? I think is it around 15?
Yeah, 15.5.
Yeah, I think 15, some point 4, some point 5. But I think this morning it was around point 5, if I'm not mistaken. Yeah, so that's basically the exchange difference, the exchange rate for the country. Now, what is exchange rate itself? When we talk of exchange rate is a ratio that we use to do the exchange. So for now, you know that the exchange rate between Ghana and then the dollar, the Ghana cedi and dollar cedi is one Ghana cedi is equivalent to $15.5. So that's the exchange rate. Now, foreign currency. Foreign currency is the currency other than your functional currency. So the functional currency is the primary currency you are using. So the foreign currency is the currency other than the functional currency. So in an exchange rate, you should always be able to identify the functional currency and that of the foreign currency. You should know, you should be able to identify them. The functional currency and that of the foreign currency. Let me move to functional currency before I come back to the foreign operation. So functional currency here is the currency of the primary economic environment in which the entity operates. So the currency in which the entity's primary activities will be dominated in is the functional currency. Although we have some indicators which we'll look at shortly as well. Also, we have foreign operations. You may be having some entities who may be having subsidiaries or either a branch of their countries, a branch of their entity in other countries. In that instance, they will be having a foreign operation. So when we talk of foreign operation, it's basically an entity that is a controlled entity. It could also be an associate. It could also be a joint arrangement. It could also be a branch of a reporting entity where the activities of which are based or conducted in a country other than those of the reporting entity. So we may be having a reporting entity or a reporting firm, which may be in Ghana, but you may be having several branches, maybe across Africa or across the world. So these several branches you may be having will be classified as a foreign operation. Foreign operation. Those who will be doing the CR will go much deeper into consolidation of foreign operations. So they will go deeper into that. Then we have monetary items. This is also very key. You should know the distinguishing, or you should know the difference between monetary items and non-monetary items, as you'll be using them more in the computation. So with monetary items, they are basically units of currency which are held either for assets and liabilities. And in case of assets, you are going to receive them. In case of liabilities, you are going to pay them in a fixed or a determinable number of currency. With monetary items, the ideology is that if the amount of money is denominated in a foreign currency, then at that date of either repayment, at that date of either settlement, you are going to settle the amount or you are going to receive the amount. In the case of asset you receive, you are going to receive the amount. In terms of liability, you are going to settle the amount in that foreign currency. In that foreign currency. So a classical case could be that if you have borrowed an amount of money in a foreign currency, let's say 100 USD dollars. So if you have borrowed $100, bear in mind that if you borrowed at the beginning of the month, then getting to the tail end, you are still going to pay the person equivalent of the 100 USD dollars, even if the exchange rate has differed. If the exchange rate has changed, you still have to pay the person dominated in the foreign currency. So that one, as we are saying, is fixed or a determinable number of currency. You are supposed to pay that amount of money. That's with monetary items. And examples of these ones are basically loans, receivables, payables, equity shares, foreign currency reserves. So these are some examples of monetary items. And what are non-monetary items? Standard makes it easier, saying that non-monetary items are items which are not monetary items. So basically, these ones they are not monetary items. And what are these? These are your PPE, your inventories that you buy. These are non-monetary items. Also, we have the definition for net investment in foreign operations, still relating to foreign operations. Yeah, it basically refers to the interest in the net asset of that operation. So the reporting entity, what's the interest they have in that foreign operation, and that's the definition for net investment. Also, you need to know about presentation currency. As the name suggests, presentation here will mean the the currency in which you are going to use to present your financial statements, in which your financial statements will be presented in. You know, every financial statement must show the currency sign. So the currency sign, you bringing a currency sign, is you showing the presentation currency that you are expected to use. And the last one here is spot exchange rate. You say spot exchange rate here is a exchange rate for immediate delivery. As at that time for your transaction, as at the time for your foreign transaction, what's that rate prevailing there? That's what we call the spot exchange rate. Now, for theoretical sake, we can ask you certain questions pertaining to the standard. What are some questions that you may be asked? Factors you consider in relation to functional currency. So if you quite remember, we said functional currency here is the currency of the primary economic environment of the entity. So it's the currency of the primary economic environment of the entity. But there are certain indicators you need to use to identify it. What are these indicators? Number one is the currency in which you get your revenue from. The currency in which you get your revenue from is one of the key indicators for functional currency. In public sector, a government can get revenue from taxes, grants, fines. Also, another key indicator could be the currency, which is mainly influenced by the sales price of your goods or service. So if you are an FM and then you trade, you buy and sell, what is the currency in which your sales price will be denominated in? That will be the functional currency. The next one deals with the currency in which the country whose competitive forces and regulation mainly determine the sales price of each goods or service. So still on the sales price, the only additional to the sales price in that this is determined by regulations or competitive forces in the market. So this one is distinguished from the second one, saying that regulations here will cause change or will cause you to determine the sales price of your goods or services. Then the last one we have is the one in which your direct costs. Your direct cost. Basically, direct cost here referring to direct labor, direct material, and any other direct cost providing that goods or services. So the currency in which is dominated, your direct costs are dominated in, which is the labor, material, and other associated costs in relating to you providing your goods or service as an entity. So these are the primary conditions you need to know. These are the primary conditions. However, we have some secondary conditions. So we consider the secondary when the primary are not visible. So these are the secondary conditions. The first one is the currency in which the funds are from the financing activities. So you know an entity activities is basically mainly broken down to three main. We have the operating, we have the financing, and then we have the investing. So when we talk of the financing here, we are looking at money you use to finance your operations as a firm. That's what in the statement of financial position we mostly term as finance by. The finance by section looks at how you finance your entity. And yeah, when we talk about finance by, I'm basically talking about two major things: your debt and your equity. So yeah, we are looking at the secondary factor here looks at what's the funds in terms of your debt and equity, what are they denominated in? That will be an indicator and a secondary indicator. Another one will also be in terms of your receipts from operating activities. What is the currency denominated in? When we talk of receipts from operating activity deals with your day-to-day transaction. So one of the receipts we can have from our operating activities will be when we sell our goods, the amount of money we get from it will be a receipt. So this one is just in a broader sense, but if you realize too, it is related to point one because point one says that the currency over here, point one of the primary factors says that the currency that the revenue is received from, it can be seen as part of the receipts from the operating activities of a firm. So these are certain theoretical things we need to know. Then we move to the computation, certain things we need to know under the computation. Mostly the translation rules and then how we recognize the exchange differences. So what are the translation rules that we need to know in order to solve the practical questions under Ipsas 4? The translation rules you need to know here is that at the date of a transaction, that's at the date that a transaction occurs, make sure that you translate the foreign transaction into the reporting currency using the spot rate. Spot rate here means the rate prevailing at that date. So if you acquired an item of PPE, it's 1st January 2020, make sure that at that first instance you translate the foreign currency into the functional currency or the reporting currency using the prevailing spot rate or the prevailing exchange rate. So this is what you do. That's the transaction date. What about reporting? If it's at reporting, yeah, we say it depends on the item you are dealing with. Is the item monetary or non-monetary? So let's go back and look at monetary and non-monetary. Now, monetary items, if you clearly remember, we said with monetary items, they are units of currencies in which they are fixed or determinable. You know the amount of money you are going to receive from them or you are going to pay. Receive from them in respect of an asset, pay in respect of liabilities are fixed. So I made a classical case as loan. If you buy a loan, you go for a loan in 100 USD dollars, in $100. Bear in mind that when you are paying a person, you pay the person in $100. So the only thing will be that if your exchange rate is not really good, it may affect you at the date of at which you're making a repayment. So that's monetary items. What about non-monetary items? Said yeah, items which are non-monetary items. Yeah, it means that with them, with the non-monetary items, they are dependent on what you have recorded in your books. But even with that one, we have additional things. I will say exceptions to that. But the examples for non-monetary items is basically PP and inventory. You know that PP, once you acquire it, you record it at its historical cost, the cost at which you acquired the PP for. You will account for it. Although we have some exceptions which we will look at. So at the transaction or at the reporting date, what do you do? What do you do? So monetary item, if it's a monetary item, you have to make sure you translate the foreign currency. Why? Why are you doing the translation of the foreign currency? You still pay the person in the foreign currency. So now translate that foreign currency using the prevailing rate so that we know the equivalent amount of money you have to pay in foreign currency. So using the same scenario I brought about. If you are owing a person $100, $100. Let's say you borrow this amount of money, let's say last month, where the Ghanaian exchange rate was 14 Ghana cedi. Now today we know that the exchange rate is 15.5, right? So let's convert this $100 to 15.5. So if it was on last month, which was 14 Ghana cedi, you would have paid 1,400. How did I get a 1,400? Just the 14 Ghana cedi multiplied by the 100. That gives me 1,400. Now let's convert the $100. If the exchange rate is now 15.5, what are you going to get? Anyone? Anyone?
1,500.
So 1,550.
1,550.
Am I right?
Yes, yes.
Okay. So it will be 1,550. So yeah, bear in mind the amount of money you are paying in Ghana city will be more, but you have to still pay the person in the in the foreign currency. You still have to pay the person in the foreign currency. You still pay the $100, but yeah, you are going to pay what more. So that's what we are talking of. The first one. The first one is saying that yeah, if it relates to monetary items, make sure that the foreign currency you translate them using the rate prevailing at the closing date. Prevailing at that closing date. What about if it's non-monetary? It's non-monetary. If it's non-monetary and it's at the historical cost, they are going to use the historic rate. So you use the historic rate. Historic rate here means the rate, the spot rate, the transaction date. So at the date at which you bought that item, that you incur the liability of 100 USD dollars, that will be the rate at that date. That's what you are going to acquire, or that's what you are going to record. The item you bought. So maybe if you bought an inventory, that will be the item. How you are going to account for that inventory item in your books? It will still be at the historic date. However, there is an exception. The exception is that if the non-monetary item is measured at fair value. So you should know that inventories can be measured at fair value. PPE can be measured at fair value. That's what we normally term as what revaluation surplus or revaluation method. The revaluation method under Ipsas 17 or IS 16. So if it's measured at fair value, then bear in mind that you are going to use the fair value, the rate prevailing at that fair value date. So you are going to use the rate at the date when the fair value was determined. You use the rate at the date when the fair value is determined. So that's the only difference you need to know. So bear in mind, if it's a monetary item, you definitely have to translate at the closing date. But when it deals with non-monetary item, you have to ask yourself, is it historic cost? If it's historic cost, then it will be the transaction date, meaning that the opening balance, nothing will change. But if it is fair value, on the date at which you are looking for the fair value, you use the rate prevailing at that date. Is there a question? Something maybe you don't understand, you want me to reiterate? Can I proceed? Okay. Okay, let's move on to the recognition of the exchange differences. So if we get differences, how do we account for it? So for instance, here we can see that we have a difference. At the date in which we bought our inventory, the Ghana cedi equivalent was 1,400. But at the date when we were making the repayment, it was at 1,550. So you could see that there will be an exchange difference. How do we account for that exchange difference? So that's what we are going to look at. So number one is that if the exchange difference relates to monetary items, then it will form part of your deficit or surplus in your statement of financial performance. Bear in mind we are doing public sector accounting and finance. And with public sector accounting and finance, any expenses or incomes you get will go to a statement of financial performance. What in FR you call as profit or loss, but here we call it statement of financial performance. But when it relates to non-monetary items, if the exchange differences relates to non-monetary items, then here we are saying that it should be treated consistently with the way in which a non-monetary item was treated. You need to treat it consistently with how the non-monetary item was treated. Yeah, what does it mean? By extension, it means that if it was in relating to an equity reserves, it is part of equity. Make sure that that exchange difference will be accounted for as part of equity. If it is part of your revenue or expenditure, then make sure it relates to your revenue or expenditure. So that's with the non-monetary items. With the monetary items, the exchange difference will just be sent to statements of financial performance. But with non-monetary item, it depends on the item of the non-monetary item. For instance, it relates to equity reserves. Equity reserves cannot be sent, the exchange loss or gain cannot be sent to statements of financial performance. Rather, it will affect your equity side of your statement of financial position, or by extension, statement of net assets. But there may be some instances it may still affect your revenue and expense. So if the items still affect your revenue and expense, then the exchange gain or loss will still go to your statement of financial performance. So bear in mind with non-monetary items, you have to look at the identity, the non-monetary item, and then you treat it consistently with how the item is being treated. We can also have exchange difference on settlement. Settlement means the day at which you settle the in terms of liability, when settle. Now, bear in mind, we can get exchange differences on year-end balances and exchange differences on settlement. So far, what we have been doing on more of year-end. If it's at the year-end, how do you go about it? So the same thing is the same thing that comes to settlement. If at the date of settlement, which may not be the same as the year end, assuming that it's not the same as the year end, you get an exchange gain or loss, should also be recorded in your statement of financial performance as well. But generally, the first two are the general points when it comes to the recognition of the exchange difference. The last one is just emanating from settlement in a case whereby you pay your liabilities, which is not equivalent to the closing date. So at this point, I'll pause for questions before we start solving some questions. Are there questions? Okay, if there are no questions, then let's start with our first question of the day. Question one, can we get a reader, please? Can we get a reader? It appears no one wants to read today. Okay.
Hello.
Yeah, yeah, you can read. Go ahead.
Okay. On 1st April 2018, the Ministry of Infrastructure Development, a public sector entity that uses the dollar as its functional currency, procures construction materials from an overseas supplier whose functional currency is chromate. The materials are priced at 54,000. Payment is made 2 months later on 31st May 2018. The prevailing exchange rates are as follows, as seen below. Required. Prepare the journal entries to record these transactions.
Okay, thank you very much.
You're
So when you
welcome.
get a question on Ipsa for foreign exchange, what do you do? First things first, you need to identify the functional currency and then the foreign currency. So in our question, what's the functional currency? You can see two currency, dollar and then chromate. So which one is the functional currency? Which one is the foreign currency?
I think it's the dollar.
It's already even stated.
Yeah, they
The
stated it. Yeah, they clearly stated it
yeah,
in this question. So it's the dollar. The dollar is a functional currency. And then the foreign currency will definitely be the chromate. This should let you know that we'll be changing from chromate to dollar because if you are dealing in functional currency ordinarily, you have to change everything into your functional currency. Okay, so let's dive into the solution. So what do we do in this instance? So question one, what do we do in this instance? The first thing we have to do is that, bear in mind, when we came to the translation rules, we said at the transaction date, what should you do? Make sure you translate a foreign currency using the spot rate. So we have to go to the question. The foreign currency we're given at the spot rate. The spot rate was the transaction date was 1st April 2018. So on 1st April 2018, we had a rate prevailing at that date. So we have to convert the foreign currency, which is the 54 chromate, at that rate. So what's the rate on 1st April? That was what was given to us over here. Says on 1st April 2018, we have chromate 1.8 is equal to $1. So yeah, what we are using to do the exchange, it will be chromate 1.8 equal to $1. Then the amount of money we need to change will be the foreign currency, which is 54 chromate. So we come here, 54 chromate will be equal to what? So here we have two approaches. We can use the normal ratio and proportion equal to what? Where we say that if, so in this key instance, the 54 is more, you compare the chromate side, the 54 is more. So we see usually say if more or less we divide, right? So it will be the 54,000 divisible by 1.80, then multiply by the equivalent amount, which is $1. Or another procedure could be that you can use ratio and proportion. So you can bring the same, let me bring the same thing here. Then we just introduce your x. Then you just cross multiply as well. In all instances, you're supposed to get the same answer. So let's do for 2. Since this is the first question, let's do for 2 to establish understanding. And the one that you like, we'll run with that. So with this one, we'll get our answer straightforward. So what will be our answer in dollars? If you calculate it, what are you going to get? Let me proceed with this. So this one you cross multiply, which will be 1.8x equal to 54,000. Then here x will be equal to 54,000 divisible by 1.8. Then x will be equal to your answer in dollars. So what are you getting? You get the same answer for both.
30,000.
30,000. So same here to 30,000. Are you fine? Yeah, question. Okay, so if that's fine, so that's what you do at the transaction date. That's what you do at the transaction date. Now, once we do this at the transaction date, the next thing we need to look at is, was there a payment within the year? So you have to check within the year, were we having any payment? So if you read the last aspect of the question, it says payment is made 2 months later on 31st May 2018. Payment. So they made payment on 31st May 2018. So once they made payment, what are you going to do about it? Remember the rules? The monetary items, you do what? You translate. But yeah, they said we should do double entry. So let's do the double entry for the first one before we even come to the second one, so that we don't skip that. So let's do the double entry for this. For the one that we acquired some procurement material. What will be the double entry? So let's do the double entry for that. Anyone to help us? What are you going to debit? What are you going to credit? Anyone to help us? What are you going to debit or credit?
Success, please, can you go back so that we see the question?
Okay. Mm-mm, I purchased something. So what are you going to do? What are you going to debit? Account and debit the receiver, credit the giver now. So we are going to debit purchases. So we debit purchases with the amount that we have, which is here. Just copy, paste. Then we are going to credit our payables. We didn't pay at that date, so we are owing. We are owing. Yeah, they said overseas supply. They didn't specify who the supplier was, so we can just classify it as our payable. Then you write your narration being procurement of what? Materials. So that will be for the journal entries for the first one. Okay, now let's go back to the second one. So the second one, I said, we have to look at when the payment was made. So we realize that, yeah, the payment was made 2 months later on 31st May 2018. So remember the rules. Yeah, it's only the monetary items you are going to what? Retranslate again. You are going to retranslate again. Reason being that if the exchange rate has changed, the amount of functional currency we need to pay the equivalent foreign currency may be more or less. So we need to now look for the foreign currency with the current exchange rate we have. We are going to do another translation. So how do we go about it? So the date that we are focusing is 31st May 2018. So on 31st May 2018, we're given an exchange rate of 1.75, 1.75 to $1. So we'll use that. So chromate 1.75 to $1. Then we'll convert our original chromate. Remember our chromate was what? 54,000. So we can use normal ratio and proportion. Yeah, to be if more, let's divide. So yeah, we are going to divide by 1.75. Or those who are also comfortable with the x cross multiply approach, you can also use that approach as well. So yeah, it will be 1.75x equal to 54,000. That will give us x is equal to 54,000 divisible by 1.75. Then what will be our answer in this case?
30,857.14 dollars.
So 30,800 and let me run it up. So it will be 57, right? If I run it up.
Yes, 57.
So 30,857. So this will be the amount we are now paying in dollars. So bear in mind this one is in dollars. The amount you are now paying in dollars. Amount you are now paying in dollars. But bear in mind that the opening date, when we translated, it was rather what? 30,000. That should let you know that we will incur what we call an exchange difference at this date. So what would be the exchange difference? You just have to pick the closing value minus the opening value to know the difference that we have. The closing value is what? 38,570 minus the opening value
30,000.
30,000. So what's the difference?
857.
So yeah, is it a gain or loss? Is it an exchange gain or an exchange loss?
It's a loss.
It's a loss. Why do you say it's a loss and not a gain? Why is it a loss and not a gain?
Okay,
If you are going to pay
I'm listening, please.
my continue.
so if at first we're supposed to pay 30,000 and now at the end we are now paying extra 857, it means that we are going to short by 857 let's say revenue instead of paying the 30,000. Now we are going to pay 30,857, making it a loss as we projected because of the changes in the
Okay, that's right. So that will be
conversion.
an exchange loss. That's right. So 857. Then we do the double entry in that respect. So let's do the double entry. What are you debiting? What are you crediting? Anyone? Double entry. Debit the receiver, credit the giver. So which one are we debiting? Which one are we crediting?
Okay, we will credit our bank account. That's the paying account, and we will debit the the payable. Let me say in that sense will be the one we bought the goods for to
The
reduce the.
payables, eh?
Yes, please. Yes, please.
So we debit payables. With which amount?
The 3857.
3857.
Yeah.
Okay. Then we are going to credit
Bank account.
bank
That's the
account.
paying
Okay, let me
account.
do it
Yes.
cash book so that we don't assume whether it's cash or bank. Let me
Okay.
do it. Let me do it. That will be what? 30.
857.
Okay. Do you agree? Do you agree? None of you are talking, meaning you agree, Anna.
Yeah, yeah, yeah. Or are we going to try and elaborate on the cash book in terms of the 857 being maybe a loss or something?
So this double entry is partly right, partly wrong.
Yes.
Look at how much did you record as payables at the initial date?
30,000.
Because
So how are you having 3857?
Okay. We'll match the difference in the payables account against our exchange loss.
Then please do it again. Means that we are not this is not complete. So we have two approaches to
Yes,
represent
sure.
this.
Okay.
It means this will just be 30,000. Then the additional, which will be we are
We'll,
supposed to debit statements of financial performance, right? If you remember, we
yeah,
said to go to statement of
yes.
financial performance. You are doing this one, PSA,
Okay.
to go to statement of financial performance. So that will be 857.
857.
Or someone can choose this approach too. you debit your payables with the eight, uh, you credit, sorry, your credit statement of, your debit statement of financial performance with the 857, you credit payables with it to increase it, right? 857. And then you now come here and then come and now debit your payables with now the total, which is now 3857. And then you credit cash book with 3857. You understand? So either you go by the one at the top or the one down here. Are we fine with this question? So literally we are done with this question. So if you have questions, let me know. Okay. If there's no question, let's move to question 2. So I'll read that. Kindly read question 2 for us. Mhm. Oh, the lady that read for us. Are you still around?
Yes,
Hello,
please.
that's it. Please, did you say something?
Question two.
My network just came.
Okay, question 2.
Ah, okay.
Okay, go ahead.
The Ministry of Health, the Ministry of Health, a public sector entity with a year end of 31st December 2021, uses dollar as its functional currency. On 25th October 2021, the ministry purchases medical supplies from a Swedish supplier for Swedish krona 286,000. The applicable exchange rates are as follows. Required. Show the accounting treatment for the above transactions under the following scenarios. A. Payment of 260,000 Swedish krona, is made on 16th October 2021.
Scroll up so that I see the
B.
question again.
B. The amount owed remains outstanding at the year end date. Thank you.
Okay, thank you very much. So we'll go to question 2 here. So with question 2, first thing first, always identify your functional currency and a foreign currency. So what's our functional currency in this case?
The dollar.
The dollar. Because here you were told, clearly told, the dollar. And definitely the Swedish krona will be the foreign currency. The next thing you have to do is that make sure you change the foreign currency to your functional currency using the date at the transaction date. So you can see clearly that the transaction date here was for 25th October 2021. So let's do that one first. So 25th October 2021. Yeah, what is the exchange rate at this date? It was $1 to the Swedish 11.16. So let me bring the Swedish krona 11.16 equivalent to $1. So we'll convert the amount of money we had the foreign currency, which is 286. So 286,000 is equal to what? So we'll do the conversion. If more, let's divide. So we divide 286,000 by 11.16, and then we multiply by $1. That will give us 25 25627, right?
25627. Yeah.
Yeah, the 25267. So this will be the amount in the functional currency. Then the next thing we have to do is, now let's look at the requirements. If probably there was a payment which has been made. So requirement A told us that payments of 286, meaning they made a full payment. Because bear in mind we are owing 286. And they said payments of 286, meaning they made a full payment. It's made on 16th November 2021. So meaning we have to find the amount of money we paid in 2021 in our functional currency. So we come here 16th November, November 2021. Yeah, what was the exchange rate at this date? So we come to the charts here. 16th November 2021, we're told that it's $1 to Swedish krona 10.81. So we come here 10.81 equivalent to $1. Then we do our conversion. 10.87, sorry, here's 10.87. We do our conversion here. So definitely, if more or less divide, so 286,000 divisible by 10.87.
26310.9. So 26311.
So we'll get, come again please,
26311.
26311. Okay. So this will be the amount of money we are paying at this date. This requirement A for us. The amount we are paying at this date. So yeah, we need to assess the exchange difference at this date. So let's look at the exchange difference. To definitely be our closing minus our opening. So yeah, our closing here is 26311 minus the opening. Opening here was 25627. So yeah, what's the exchange difference? And is it a gain or
684.
is it a loss?
It's a gain. It's a loss, sorry.
It's a loss. Why do you say it's a
Yes.
loss?
Okay, so we are going, previously we needed 26 25,637 for the foreign currency. And then with the same foreign currency amount, which is 286,000, we need the our functional currency has increased to 26,311 to get that same amount of 286,000 Swedish krona. I don't know whether you get it.
Okay, that's correct.
Okay.
Well done. Okay, so yeah, what's the difference?
684.
684. Then yeah, double entry. So yeah, let's do a double entry from the beginning. We didn't do it from the beginning. So let me do it here. Let's bring our dates first, then the details. debit, credit. So yeah, on 25th, we purchased an item, right, of inventory, medical supplies. So to form part of our purchases. So we are going to debit purchases with the 25, the amount we translated, 2527. And then at this date we were owing them, so it's going to be payables. 25627. Bear in mind we are working in dollars. Yeah, so let me bring it. Then write your narration. So being purchase of medical supplies recorded. Then we come to the next date, which was 16th. 16th of this month. 16th November. Over here, we made a payment. So who can help us with the double entry? We have done that for the other one. So let me see if this one you get it. What are we debiting? What are we crediting?
Can we see the question or
Okay.
so
So what are we debiting? What are we crediting?
Um, we
we are okay. You debit our payables and
We'll debit
credit card.
payables. With which figure?
Yeah.
okay. We will debit our payables with the 25,627,
25,
and
627.
yeah, and the difference, because it still doesn't sum up to the total that we are paying right now, and the
Okay.
difference will also go to the statement of financial performance.
Statement of financial performance,
Yeah.
which is 684.
Six.
Okay.
Yeah.
Then where will the credits go?
It will be coming from our account, as in bank account, or yeah. How did you
Okay.
put that one?
Cash book.
Yes, please.
Okay. Which is the total 26311. Can you explain? Yeah, right. So help us with the explanation.
Can I explain it or he's come to explain?
Okay. You can help him with the explanation.
Since we had 26,311 as the balance at the end, and then we realized that there was an
And
exchange
wait, you
difference.
said, do you say 22 or 26?
26.
Okay, 26. Okay, proceed.
Yeah, the balance at the end, and then realized that there was an exchange difference which resulted as a loss of 684. So from that balance at the end figure, we debited the loss, the exchange loss from the balance at the end, and then we made payments of some materials that were bought of, and the payment was 25,627. So with a double entry, we could see that, or we established the fact that the payables, we made payments of the items that we already purchased on credit, and then the loss that we incurred has also been catered for with this cash amount of 26,311. That's how I understand it. I don't know if it makes sense.
Yeah, yeah, right. So thank you very much for the explanation. So you just bring a narration. Someone to help us with the narration for this one. I did the first one for you soon. Someone should help with the second one. Being
Being payment of medical supply.
being payment of
Medical
Medical.
supplies.
medical supplies outstanding on 25th October. Okay, so that's fine. So this will be the journal treatment for that for A. So the bear in mind this one is for A. Let's go to B. So B says that we should assume that the amount owed remains outstanding at the year end. So at year end means yeah, you have not made any payments. And if you have not made any payments, you need to report the figures at your financial statement at the year end. So year end, what's going to be? We'll have to use the exchange rate at that year end, which will be given as $1 and then 11.02 Swedish krona. So we'll do that. So we'll come here. That's 31st December 2021. So we bring the exchange. So that's SWK 10 points. Is it 10? Let me check again. 11 points, sorry. That's 11.02 to $1. Then we translate. So remember our original figure was 286,000 equal to question mark. We do the exchange if more or less divide. So what do we get for this one?
25953.
25953. So when we're done with here, we have to find for the exchange difference, which will be the closing minus the opening. So this closing, the opening was 2562. So 25627. So yeah, I'm making a gain or a loss.
You are making a loss
A
of
loss.
326.
326.
2 6.
Okay, let's do the journal quickly. So yeah, we'll just focus on the closing balance because we have already done the opening balance already in the first instance. So we're focusing on 31st December. So let's bring that. So date, particulars of details, yeah, debit, credit. Okay, so what are we debiting? Yeah, yeah, bear in mind we didn't make any
Payable.
payment, so hey, don't say payable, so don't be in a hurry. Yeah, we didn't make any payments. So why are we debiting payables? We're not going to debit payables. Anyone? Yeah, you
Can
didn't
we
make
still see the question?
the question. Okay, okay. Let me go to the question.
Okay, let me
Hello?
try. I think since there was no payment that was done, we will look at the change in the figures, whether it was a gain or a
A
loss.
loss.
Then, if it was a gain, then we will credit the statement of financial performance. Then we match it against our hello.
Yeah, proceed, proceed. I'm listening. We match it against. Proceed. Hello. Yeah, I think he's no longer around. So let me proceed. So he was on the right track. Yeah, the only thing we are supposed to account for is your exchange gain or loss. Okay, hand is up. Please go ahead.
Okay, so with the difference, which is the exchange loss, we will debit the statement of financial position, performance, and then credit payables to the difference.
And credit payable with the difference. Why?
Because the payables first we are like we've not paid, and now the amount which you're supposed to pay has increased. So we need to add it.
Okay, that's true. So you're adding by what's crediting because you know that payables increase on the credit side. You have
Yeah.
credit balance and then the increase on the credit side. So that's true. So our narration will be what? Being what? Being exchange loss recognized. Recognizing for year end foreign transaction. Okay, so that will end question number two. Is there any question you'd like to ask in question two?
Hello.
Yeah, go ahead. If you have a question, go ahead. Yeah, someone was speaking. You can go ahead.
Okay. Please, I was asking that let's say maybe there was some part payment that was done within the period, and maybe final payment or maybe some balance was still left. How would the
That's our next
adjustment?
question.
Oh, okay, 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 okay.
Okay, any other on this one? Okay, so let's move to the next question. Where what's the question that the guy mentioned earlier will be captured in here. So question three.
Sure, sure.
Arida, please continue.
Who is Arida?
Yeah, Arida, the lady. I want to
Ah,
avoid.
Farida.
I want to avoid mentioning names. So
You want to avoid?
mentioning names.
Ah, I thought you were mentioning somebody's name.
Oh no, please. I said
Okay.
Arida. So
The
kindly read
Cape
for us.
Coast Metropolitan Assembly bought a new car on credit from Toyota Company for use by the MCE at a price of 100,000 US dollars on 1st October 2021. The invoice value was due for settlement in two equal installments on 30th November 2021 and 31st January 2022. The exchange rate moved as follows. Required. Explain together with quantitative calculations how each of the above transactions will be dealt with in the 2021 Statement of Financial Performance and Statement of Financial Position as at 31st December 2021.
Okay, thank you very much. So yeah, they said explain. So we need to see some write up. So how are you going to begin our explanation? So first, tell us the IPSA it relates to. IPSA the question relates to. Then you tell us the treatment, the measurement treatment of that particular IPSA relating to your transaction. Depending on the marks there, you can decide to do further elaboration, and then you end with the computation is shown below. So a classical example you can use is you can say that per the facts in the question, this question relates to IPSA 4, the effect of changes in foreign exchange rates. Then tell us the treatment. So what's the treatment over here? Tell us that the translation rules is that at the transaction date, the foreign currency will be translated using the transaction date spot rate. At the settlement date, we are going to translate the amount using the rates prevailing at the settlement date. And at the closing date, you are going to translate using the and you're going to translate the monetary items. Let me be specific. Monetary items using the closing rate. However, if it relates to non-monetary assets, you are going to use the historic rate, meaning the rates prevailing at the transaction date. But if the non-monetary asset is being measured at fair value, you are going to use the rate at a fair value date. Then you can end with the computation is shown below. Do you get it? So when you see explain, don't be in a hurry to just solve. Otherwise, you may lose the marks for the explanation. Are you fine? Okay, so let me proceed then. Just receive a thumbs up. So that means you're fine. So let's go to the computation. So that's question three. So with question three, first things first, identify your functional currency and your foreign currency. So in this question, what's our functional currency? What's our foreign currency? Anyone? What's our functional currency? What's our foreign currency? Yeah, hand is up. Go ahead, please.
So our functional currency is the Ghana cedis, and then the foreign one is the US dollar.
How do you know? Because this question they didn't mention currency this, currency that. So how were you able to determine it?
So the translation rule, that's what I use. Like we need to transfer the rate from foreign to our functional. And here in the case, the asset was bought in in US dollar. So it
Okay.
means probably that's the foreign currency.
Okay. So the asset was bought in US dollars. So that clearly will tell you that that will be the foreign currency. And then the other currency which may be in the question will be your functional currency. So yeah, so that's true. So let's proceed then. So first things first, we will translate at the transaction date. So the transaction date is what? 1st October 2021. So we start 1st October 2021. We'll use the rate prevailing at that date. Yeah, when you see a rate like this without anything there, you assume it's one. Remember, we say in mathematics, we say any number is divisible by what? One, right? Every number, every default number is divisible by one. So if you just see it that way, it means it's divisible by one. So yeah, by extension, it means $1 is equivalent to Ghana cedi, and the Ghana cedi is 6. So yeah, the foreign currency we're giving was 100 USD dollars. Will be equivalent to how much Ghana cedi? So if more or less divide, then we multiply by our Ghana cedi. What do we get in Ghana cedi? We get 600 or 600 Ghana cedi, 600,000 Ghana cedi. Okay, so with that settled, that's the transaction date. Then we move on to was there any payment within the year? So we saw over here that the invoice value was due for settlement in two equal installments. First being done on 30th November 2021, another one in 30th January of next year, which is 2022. So let's first focus on our current reporting period, which is 30th November 2021. So we'll translate at this date, 30th November 2021. Now bear in mind that here you only made half payment, half payment, meaning that you only paid half of the foreign currency. So that means the foreign currency, which is 100, divisible by what? 2. You only paid half. So meaning divisible by 2. That will be what? 50,000 US dollars. Now let's now bring the exchange rate prevailing at this date. It was 6.2 Ghana cedi to $1. So that will be $1 to 6.2. $1 to 6.2. So that will be 100 USD dollars. Is equal to question mark. So this will be multiplied by 6.2. Yes, it's 50. Sorry, it's supposed to be 50 over here. So that will be 50. So what are you going to get?
310,000.
310,000. 310,000. So yeah, we need to find the exchange gain or loss. So the exchange difference at this date. But yeah, the exchange difference here, bear in mind that first date, this amount of money was the full amount. So if you are looking at half of this amount, half of the 600,000, that will be 300, right? 300,000. So that will be the equivalent you are going to use. You're not going to use the 600,000 because you didn't pay all, you only paid half. So you can compare with just half of it. So yeah, it will be the closing, which is the 310,000 minus 300,000. So the exchange loss will be
10,000.
10,000. Awesome. That will be 10,000. Awesome. So this is clearly the exchange loss at this date. Are we fine with, with this one? So this is for 30th November 2021. Then I say the next payment was made 31st January 2022. However, look at your reporting date, the requirement. The requirement told us that we are reporting at 31st December 2021. That should tell you that everything that we used in 2022, that should consign in your current year. So you don't have to bother yourself with 2022. So with that being said, this one here is the amount you're going to show in your financial statement at the year end. The amount you show at the year end will be your focus. So here we are going to translate the remaining left. So what's the remaining amount we have left in foreign currency? The remaining will be the total that we had, which was the 100,000, and then you have only paid 50 of it, 50,000 of it. So the remaining amount here is 50,000. We are going to translate this one at the date 31st December. So let me bring the date 31st December 2021. The rate over there was $1 to 6.5 dollars. So that will be 50,000 equal to question mark. Then if more or less divide, so let me bring this and then make some changes. Yeah, it will be 6.5. Does someone calculate for us?
3,200, 325,000.
325,000.
Thousand.
Okay, thank you. So it will be 325,000 at this date. Now at this date too, we need to find the exchange difference. The exchange difference here will be the 325,000 minus the opening balance. Bear in mind half of the 600. That was 300,000.
300,000.
So here too, we have an exchange loss of
Lost 25,000.
25,000. 25,000. So this is the workings we need. But bear in mind we are not done because the question told us to do what? To present in the statement of financial performance and statement of financial position. So we need to present. So let's do that one beside it. So this was in relation to CCMA. bring the name of the public sector firm, CCMA, and we are preparing statements of financial statement of financial performance for 31st December 2021. You bring your currency sign, very important. And yeah, what are you presenting over here? What are you expected to show? You're supposed to show the exchange loss. Bear in mind here there were two. The first one was 10,000 over here. So we show that 10,000 plus the second one, which was the 25 we had here. Adding the two together will give us 35. This is a loss or this is an expense, so we need to show the accounting negative for it. So this is exchange loss, so you need to show the accounting negative for it. Then when we are done, we need to prepare statements of financial position. So let me just make changes over here. Financial position. Assets. You bring your currency sign as well. And then yeah, what are you going to show over here? Bear in mind you acquired a non-current asset. So we need to show the value of the non-current asset. So non-current asset. That was a car. So the PPE we have, which is a car, a Toyota car, we need to show it. So the value was 600,000 in our books. And we are done. Is there questions you'd like to ask? Is there questions you'd like to ask? Okay, it appears everyone is fine. So this was just the final aspect, the final question we had. That means that we are done for today. This is basically an overview of the Ipsas 4. So we are done with the standard. Maybe I'll open the platform if you have any question for me.